Now for more on the turmoil in Portugal and what it means for the European economy, let's go to New York, where we're joined by Vidak. Radonjic. He is the founder and CEO of the Beryl Consulting Group. Welcome to the show. What about the spillover effect of this? You know, people are concerned about what the fragile government there, and what if they once again go with their hat in hand asking for another handout or asking for a restructuring of this deal? How do you see things shaking out?
Well, Europe has been with us for 3 years, starting with Greece. And Portugal actually has been almost like a dormant party in this euro mess, I would call. Overnight, 10-year bond was about 8%, which is really, really worrisome. And it settled at, I believe, around 740. So as you know, bond players are the one who are determining the fate of a country. In terms of spill effect, I do not see a major one, because obviously Portugal is a tiny country. It just needs, I would say, $5 to $10 billion additional aid to kind of help its economy. But you know, whenever things like that happen, whenever a yield on a 10-year jumps like that, there is definitely nervousness in the market, and the spillover effect is there.
Vidak, I spoke to a gentleman just last hour in Lisbon who said, you know, I'd like to get an answer on how do you grow an economy, how do you make things better when people are out on the streets, they don't have jobs, they don't have food. There's this level of anger there that's palpable. And he does have a point, doesn't he?
Yeah, he does have a point, because similar to United States and other countries, unfortunately, politicians and even a private sector is relying on few people in central bank who are determining the fate of economies. So obviously, the free money is not going to go forever. So everybody is worried, and the precious time has been lost for many countries. They should have done a little bit much more on structural reforms to boost employment. It's really very sad when 50% of youth in countries like Spain or Greece, or even now, you know, the new member Croatia is coming on board, is without jobs. So that's extremely worrisome, and the prescription so far has been only on the monetary front.
You know, I want to get your thoughts as well about these European bank downgrades. You know, you got three big firms that were kind of hit. They rely heavily on investment banking to drive revenue growth. What do you make of that?
Yeah, to be specific, it was a Credit Suisse, Barclays, and I believe Deutsche Bank.
Deutsche Bank.
So all these three banks are, you know, having issues because 40 to 50% of the revenues are coming from investment banking. And as we know, whenever interest rates are going up in the world, and there is so much uncertainty, there is so much regulations coming up, these banks are going to be the first to be hit. So obviously, Moody's has downgraded these banks from A+ to A to a stable level. So I don't see any more downgrades in the future. But the stock has reflected that. For example, Deutsche Bank has been at 40, 41, 42 level for the last 12 months or so, in spite of the fact that Goldman Sachs and other United States banks have appreciated considerably.
What about the commodities markets? Of course, we're seeing oil trading higher now because of the uncertainty there in Egypt. What do you make of that?
Sure. Egypt, of course, is not a major oil producer. However, we have a Suez Canal there, so shipping lines are everything goes through that country, and that's why we have this 101, 102 levels, which we haven't seen since May of last year. I think technically oil might basically stop here at these levels because it always does. In terms of other commodities like precious metals like gold was up 1% today, but that was after being beaten down considerably last week. So we do have some life in terms of precious metals, gold and silver, because whenever we have uncertainty in the world, these precious metals are going up.
Well, Vidak, it's always a pleasure talking to you. We certainly could cover a lot more ground, but we've run out of time. Thanks so much for joining us from New York.
Thank you, Mike.